Good evening and welcome back to This Is What I Think About That. This is Sue Carlin with the Heritage Real Property Group of Keller Williams Realty in Cherry Hill, New Jersey. I'm so glad you're with us tonight because we're going to talk about something that investors need to know so that they can save money when they transfer properties. But I'm not going to tell you all about that. I have a special guest tonight, someone I've known about 12 years, and I'd like to introduce him to you. His name is David Gorenberg, JD, with Accruit LLC. David, welcome to This Is What I Think About That. And tell us a little bit about your background, David.
Sue, it's a pleasure to be here. My background is I started my professional career as an attorney, practicing law right on Main Street in Moorestown. After a while, I decided I didn't like that anymore. And the next thing I knew, I became a full-time qualified intermediary for Section 1031 tax-deferred exchanges. I have no idea how I got here, but that's my story and I'm sticking with it.
Okay, a qualified intermediary and a tax attorney.
My law practice was business and real estate transactional work mostly.
Okay. So you and I met about 10 or 12 years ago as a result of you coming into our office, and we were introduced to you, and I had never heard of what it is that you do. And the reason I had never heard of it was because I did not at the time own investment property. So for those of you who are watching right now, David's going to give us a little background about what it is that a 1031 exchange will do for you, the investor, when you're ready to sell or buy your next property. So David, tell us basically, what is a 1031 exchange?
In a nutshell, in essentially one sentence, a 1031 exchange allows an investor to play monopoly with real properties and real money and not pay capital gains tax when they sell Pennsylvania Avenue to upgrade to Boardwalk.
Wow.
How's that?
I'm playing the game in my head.
I'll see you next week.
I'm playing the game in my head when you said that. Okay, so it allows me to pick one property and upgrade to another property without paying what?
Without paying capital gains tax or depreciation recapture tax.
Okay, so that's why there are some people in the real estate business who we never see in the day-to-day real estate, the residential residential business end of it, but you see them. They are people who, are they generally individuals? Are they LLCs? Are they corporations? What kind of people do 1031 exchanges?
It's interesting. There is some hard data out there. The vast majority of people who do 1031 exchanges are in fact individuals, people like you and me.
Mm-hmm.
Many of those people own the property in an LLC, but the vast majority of the people who are doing 1031 exchanges are folks like you and me, and it's not the big corporations.
Really? I had no idea. So, okay, so now I own a property, or I want to buy a property, and let's say I buy a duplex. I live in half, and I rent out the other half. When I go to sell that, does that qualify for a 1031 exchange? Great
question. The half that you live in does not.
Okay.
But remember, you get the $250,000 or $500,000 exclusion on the half you live in.
Okay. That's right, because it's my primary residence.
Correct.
Okay.
The half that is a rental absolutely qualifies.
Well, how does that money get separated?
Okay. You bought the building. Let's say you bought the building for $250,000.
Mm-hmm.
And a bunch of years later, it's now worth $500,000.
Mm-hmm.
Okay. You bought a good property in a good location,
mm-hmm.
and you took care of it, and it's pretty on the outside. And now somebody wants to pay you $500,000. Well, what we know, first of all, it's a duplex. So
mm-hmm.
you don't need to be a rocket scientist to figure out that the left half and the right half are worth approximately the same thing.
Mm-hmm.
But just as importantly, we will probably confirm with your accountant that in fact, the duplex was treated on your tax return as one half your personal residence and one half a rental property.
Okay.
Okay.
So,
And it may be different. I'm talking about a duplex that's side by side, but what if you own a property that's an upstairs and a downstairs and one has a few more square feet? And that's why we're going to confirm with your accountant how the taxes and the utilities and all of that were apportioned during the time you owned the property.
you know, you're saying something very important, uh, and that's the word accountant. I know there are a lot of people who own a duplex or something else where they're renting out a piece of it and they're not using an accountant. They're doing whatever it is online, Intuit Books or something like that, or QuickBooks. You're recommending that if you've got an investment property of any kind, even if you're living in it, you need an accountant, you need a profit and loss sheet. Is that true?
Yes, and I'm going to go a little further. You know, you can
Okay.
go online today. This is 2020. We're almost in 2021. You
Mm.
can go online and you can find resources to learn how to do anything you want. In fact, you could probably even learn how to do an appendectomy, but you wouldn't do your own appendectomy. At least I
No,
don't
I
think you
wouldn't.
would. I certainly would.
I would
There are a
not.
lot of things I will do on my own, but you know, for the nominal cost of an accountant and an
Mhm.
attorney, look, I wouldn't recommend selling the property without a real estate agent either. You
No,
can, there's no legal requirement that you use a real estate agent,
no.
but we all know the value that a real estate agent brings to the transaction.
Mhm, mhm.
Having an attorney and an accountant in your arsenal of tools, absolutely important.
Okay, so we'll use me as an example. Let's say that I have purchased a duplex and I have lived in half. I really don't want to leave my duplex. If I sell the other half, let's say it's not an up and down, it's a side by side. If I sell the other half, does that other half as a single sale qualify as a 1031 exchange?
Yes, you live in number 2 and you're selling number 4. Absolutely. You can do a 1031 exchange, and now it becomes easy because we're selling the that entire portion of the property.
Okay, I know you're an attorney and I know that you are a qualified fiduciary with regard to uh, doing the 1031. Is that the right word, fiduciary? No,
Qualified
qualified.
intermediary, but it's close enough.
Okay, good. Um, Will you be able to give me some advice on exactly how to get that sale done? Can you do that and also be my real estate attorney in the same transaction?
Great question. The 1031 exchange regulations by which I live essentially say that I cannot be your attorney and your qualified intermediary. Let's just call it QI. I can't be your 1031 exchange QI and also provide you tax or legal advice.
Okay, that's good. I'm glad I asked that question. So now I really and truly, because this is a commercial transaction, I need 2 attorneys. I
Correct.
need my qualified intermediary and I need my real estate attorney.
Correct.
Okay. Okay. So now I have a buyer. We've got a settlement, and oh my gosh, I could take that check.
No, you
But
can't.
thank you. Why can I not take that check?
So the 1031, so let's start for a second. The statute, section 1031 is 1 page. There's not a whole lot to it. In fact, the meat and potatoes is really boiled down to 1 or 2 sentences. The regulations that tell us how to operate within section 1031 are 30 or 40 pages long.
Okay.
In fine print on tissue thin paper.
Okay.
Among the restrictions to have a 1031 exchange pass muster in the event the IRS ever audits you is that you, when you sell the property, must not have even constructive receipt of the cash generated at the sale. You cannot touch it, nor can your attorney have it, nor can your parents, your spouse, or your children.
Okay. I cannot touch that.
Third party.
A third party, a qualified intermediary, which is you.
Correct.
Okay. Now, I can't touch the check. Oh man, can I even take $50? Can I take anything out of that check?
Well, you can take money out of that check, but whatever you take is going to be subject to tax.
Okay.
Okay, so, I mean, I'll give you an
Capital
example.
gains tax.
It's going to be subject to capital gains and or depreciation recapture. Yeah, so you pull out
Okay.
$100, you're going to end up with 75.
Okay. So it is possible to take some out.
Correct.
Do you recommend that?
Um, Personally, no. And when this comes up in conversation, I would ask you additional questions, uh, and I'll find out, what is it that you're trying to accomplish?
Mm-hmm.
And what I ultimately find out is that you want this additional cash for some other legitimate business purpose. You don't need it today, but you do need it pretty soon. So not only I, but all of my peers would encourage you to reinvest all of it into the new property. And
Mm-hmm.
then afterwards, maybe do a cash out refi for a part of it. So now instead of
Great
pulling
idea.
out $100 today at the closing
Mm-hmm.
table,
Mm-hmm.
you pull out $100 next month after you've bought your replacement property. Now you're going to have to pay that back over time,
Mm-hmm.
but you have the $100 and it's not a taxable event.
Okay. Okay. So we're at the settlement table. Are you with me at the settlement table?
Rarely,
Rarely. Okay.
usually no,
You're
because I'm
just in.
handling transactions all around the country.
So the title company sends you the check or wires the check into your account.
Correct.
Okay. Now, let us say then I have an outstanding amount of 250,000 or 2.5 million, whatever it is, in the account with you, my qualified intermediary. And I now have to find a property that I want to invest in. I have two questions. How soon do I have to invest it? And do I have to invest it in sticks, bricks, and mortar?
Great questions. And I'm going to answer an additional question on top of that.
Okay.
First, from the day of closing, so if we go to closing today, November 19th, you have 45 days from today to identify a list of potential replacement properties.
A list.
A list.
Okay.
That list is generally pretty short. Usually it's 3 properties.
Okay.
You can identify more. It gets a little complicated if you want to identify more than 3 properties. You don't have to identify 3 properties. You may already know exactly what property you're going to buy.
Okay.
And you can identify just one property. You also have from today, November 19th, the sooner of 180 days or the due date of your tax return. Well, the due date of your tax return for calendar 2020 is April 15th of 2021.
Mm-hmm.
180 days from today would take you well into May.
Yes.
So you will do one of 2 things. You will either complete your 1031 exchange promptly so that you can file your tax return on April 15th, or you'll file for an extension on your tax return so that you can get the full 180 days if you need it.
Thus, I need an accountant and I need a real estate attorney, and I still need you, my QI.
And you still need me. Yeah.
I'm filing my list. I'm making a declaration of the list of properties that I think I might be buying with you.
Correct.
Does my other attorney need to know that?
It's probably, I mean,
If he's going to
under
stay
the
in the
regulation,
transaction.
doesn't need to, but yeah, it's a good idea that your attorney knows what you're involved in so that they can, assist in any negotiations that may be
Yes.
necessary.
Okay. Okay.
Now, the third question that you asked, or the second question that you asked, was, can I invest in dirt or must I invest in bricks and sticks?
Yes.
I'm going to give you multiple answers there as well. So we sold one property. There is no requirement that you only buy one property. You could buy 2 properties or 3 properties or 5 properties, depending on how much money you have.
And before you go any further, those properties can be anywhere in the United States. Is that correct?
Anywhere in the United States.
But not Canada, not Mexico, not out of the country.
Correct.
Okay.
So, and how many properties you buy is going to largely be a function of what was the value of what we just sold, right?
Yes.
If you're selling a $250,000 property, that limits your choices. If you sold for 2.5 million, your choices just got bigger. Right? So you can buy multiple properties.
Okay.
You can buy bricks and sticks. You can buy dirt. You can mix and match. And just because I sold a duplex in Haddon Heights or Cherry Hill or wherever it may be,
Mhm.
doesn't mean I need to buy more residential real estate. I could sell residential. I could buy, as we said, raw land. I could buy commercial, retail, industrial, multifamily. Real estate is real estate is real estate as long as it's all in the United States.
Can that money go into a real estate investment trust?
No, but.
No, but
No, but.
unless
No,
I
and a
start it.
but.
Okay.
No, you can't buy a REIT, a real estate investment trust,
Okay.
excuse me, because the regulations and the statutes say that you cannot buy an interest in a trust. However, there is a creature out there that looks like a REIT, smells like a REIT, tastes like a REIT, but isn't a REIT. And it's
Okay.
called a Delaware statutory trust. And in fact, but for the fact that it's created under Delaware law, it otherwise looks exactly like a REIT. Sometimes they own multiple properties, sometimes it's just one property, but you can mix and match and you can buy an interest in a Delaware statutory trust if you'd like.
I'm glad that you've mentioned this because recently there is a lot of advertising, especially on radio, about investing in real estate investment trusts. I've heard it on two particular stations, and I'm glad you clarified that. What is it that's so specific about the state of Delaware that so many things can be incorporated or LLC there? Is that their name? Is that their fame? Is that what
That's the
Delaware
game
is
plan.
famous for?
That's the game plan. And that's part of why they have no sales tax,
Okay.
because more corporations and LLCs and companies call Delaware home than any other state in the country. And every corporation that calls Delaware home files income tax in Delaware and pays registration fees every year in Delaware. And
Okay.
because they have all those other fees, they don't need sales tax.
By the way, those of you who are watching our presentation, please be sure that you reach over here, over there actually, and you hit the like button, and don't hesitate to subscribe to my YouTube channel, because my purpose is to bring to you, my viewers, information about things that I believe are interesting that we don't have answers for with regard to the real estate industry and business and other things that are going on in our world as we are living. So don't forget, hit the like button and subscribe. Now, David, I would be remiss if I didn't ask you right now to slowly tell us, how do we get in touch with you? We're not finished yet, but I want to know, how do my listeners get in touch with David Gorenberg?
So a couple of ways. First of all, you can find me on LinkedIn. That always works. My business contact information is very simple. My email address is davidg, davidg, at accruit, ACCRUIT.com.
Okay.
And those two ways will get you here 99% of the time.
Okay, and as all of you know, when I put a YouTube out, I usually put all that detail in the explanation at the bottom of the YouTube, so you'll be able to see it there. Okay, David, so now I am at the point where I'm pretty sure I know what I'm going to buy, and I'm getting down to the wire of that 180 days, but we're in COVID, and COVID is saying, wait a minute, we have all these regulations. Has COVID interfered with the 1031 exchange at all? And do we have anything to be concerned about with that?
Yeah, COVID has impacted my business in exactly the same ways it's impacted yours. First of all, right now the market is blazing hot.
Mm-hmm.
From everything I've seen, it's a seller's market. If a property is in good condition, there's a bidding war.
Mm-hmm.
So I had conversations earlier today with a client who is selling 2 properties.
Mm-hmm.
And she's concerned that she won't be able to lock something down during the 45-day identification period. She doesn't want, she knows she can't wait the full 180 days.
Mm-hmm.
So yes, what it's impacting is some of my clients have said, you know what, with COVID, it's just too difficult for me to get out and look around. I don't feel like walking through a property.
Right.
So they've either let their exchange fail or not even started one in the first place. And that's a shame.
So when an exchange fails, that has an impact financially for the person whose money is sitting in your account. How does that work? What happens?
Well, at the appropriate time, we return their cash to them. And when they file their tax return next year, they will simply acknowledge that they sold a piece of investment property, and they'll pay the depreciation, recapture, and the capital gains taxes.
When you hold a 1031 exchange for a client, I'm assuming there is a fee, a bank fee of some sort, or a professional fee. Can you explain that to us?
Sure. First, let me say that my fee, when you look at a closing statement, is almost always the smallest fee on the closing statement. The
Okay.
attorney charges more, the real estate agent charges more, the title company charges more, everybody charges more than we do. The only fees that are smaller than ours are like wire transfer fees or transfer taxes and documentary stamps, those kinds of things.
Mm-hmm.
Our fee, and we will be very transparent and upfront with our client at the very beginning, and it's going to be a function of the value of the property, whether they're selling or buying multiple properties, whether they're giving us ample notice or they're calling me today at 4:30 saying, oh, I have closing tomorrow morning at 10 o'clock. But fees range from $1,000 to $2,000 or $3,000 or $4,000 for more complex exchanges, and they can go up. I once charged a client $40,000 for a fee and they didn't balk.
You're absolutely right. That's the smallest fee on the closing document. You're absolutely correct.
Right.
Well, that's great. I'm glad to hear that. David, we are coming to about the close of our interview. And at the close of my interview, I usually have something wonderful to say, but I know that you are a man of, shall I say, righteousness. I say it that way. And I trust you. And I would like to ask you to take up to 2 minutes to say whatever you would like to say to the people who are watching, and then I'll close.
Sue, first, I want to thank you for having me here tonight. This was a pleasure. I'm happy to do this again at your desire, at your request. For the folks who are watching, when you reach out to me, please mention that you saw me here with Sue tonight, because I want to know to thank her. And of course, I want to also know to charge you double. I mean, I'm sorry, not to charge you double, but I do want to know to thank her for putting us together. When you are looking to hire a qualified intermediary, I encourage you to do your due diligence, because not all qualified intermediaries are the same, just like not all real estate agents are the same, and not all doctors are the same. There is no licensing requirement to be a qualified intermediary. So the same person that did the oil change in your car last weekend could technically be your qualified intermediary. I'm an attorney. I've been licensed in New Jersey and Pennsylvania for just about 30 years. It pains me to think that. I've been doing 1031 exchanges full-time for about 20 years. I'm past president of our National Trade Association. I still sit on the ethics committee of our trade association. I do continuing education courses around the country, and my law license is very important to me. So there's nothing that I would do to jeopardize that in handling your transaction. And I look very much forward to working with you.
Thank you so much, David. I'm so glad you said yes. I knew you would. Ladies and gentlemen, thank you so much for being with us tonight. This is Sue Carlin, and this is what I think about that and the Heritage Real Property Group at Keller Williams Realty in Cherry Hill. Wishing you all a wonderful, happy Thanksgiving. Get together with your family, please. We need it. Bye for now.